At the top of the screen I listed accounting elements, and accounting elements are the basic language of financial accounting. I've actually pre-written the 8 accounting elements, and they are assets, liabilities, equity, revenues, expenses, gains, losses, and other comprehensive income. So you'll actually notice that assets, liabilities, and equity all fall on the balance sheet, while revenues, expenses, gains, and losses are all income statement elements. And other comprehensive income is just comprehensive income that is not included in net income. That's why it is called other comprehensive income. And this will show up on our comprehensive income statement. So these accounting elements, when we're actually performing transactions or day-to-day transactions, all transactions will affect one or more of these elements. So let's actually do an example to make sure that I'm not deceiving you. First example may be, let's say we're about to issue some dividends. We haven't actually issued them yet, but we are preparing to do so. Then, since we're essentially acknowledging to the shareholders that a dividend is coming, this is going to be a reduction, which is why I have a subtraction sign here, to retained earnings, because the profit is being distributed to the owners instead of being retained in the business. And since we're also going to be issuing them cash but not yet, we have a liability, which is an increase in the liability to dividends payable, which is a liability account. So like I showed, retained earnings is an equity account and dividends payable is a liability. So you can see how that one transaction affected two elements, the equity element and the liability element. Let's do another one. Let's do a simpler one. Let's say we purchase a building. If we purchase a building, we're going to be recognizing an increase in the building account, which is an asset, and we're going to be recognizing an outflow of cash, which is an asset. So in this case, this transaction only affected one element. It only affected the asset element. Alright, so transactions don't always have to affect all elements. They just have to affect one or more. Okay, so essentially that was the idea of the tutorial. I just wanted to explain the elements and how there's only 8 of them and how all accounts can be sorted into these different accounting elements. And in the next tutorial I'll actually define what assets, liabilities, revenues, expenses, gains, losses, and all of this stuff actually is. Make sure to subscribe, and if you have any comments, leave them below. See you in the next one.